Digital Assets Market Outlook Calendar Week 35. This review is not an economic calendar, but a condensed picture of the events that shaped the past week. It focuses on the factors that moved prices, liquidity, and positioning across digital assets. In Calendar Week 34, the strongest macro impulse came from the bond market. The US Treasury announced buybacks of long-dated government bonds. Nominal yields, real yields, and the dollar declined, easing financing conditions for liquid risk assets. At the same time, the risk premium on US high-yield bonds widened slightly. This limited credit tightening prevented classification as a broad risk-on regime. US data remained mixed. Industrial production came in slightly below consensus, while regional business surveys and services showed robust activity. Building permits increased, while housing starts and pending home sales declined. Initial jobless claims remained low, and the labor market showed no abrupt weakening. The releases established no new path for yields or the dollar. AI and technology stocks remained sensitive to yields and corporate announcements. Elevated valuations concentrated market leadership among a small number of large companies. Wider credit spreads and selective liquidity kept breadth weak and separated large assets from financing-dependent segments. Digital assets received direct demand through US spot ETFs. Bitcoin products recorded inflows of around $1.9 billion, while Ether products also finished in positive territory. Open interest and positive funding increased at the same time. This raised leverage and sensitivity to liquidations. Token unlocks had a local impact through additional supply and thinner order books. The Iran conflict remained a separate, disruptive factor. Attacks on vessels and reports of missile activity around the Strait of Hormuz kept energy prices, freight routes, and insurance premiums in focus. The passage remained open, but traffic was restricted. Diplomatic contacts continued without verifiable easing. Digital assets reacted mainly to headlines and short-term risk premiums. Two indicators summarize the current market structure. Bitcoin dominance stands at 59.2%, while the Crypto Fear and Greed Index is at 66 points. Bitcoin remains the market's leading structure. Altcoins are participating selectively, while market breadth remains limited and dependent on liquidity. Quantum data analytics did not develop or activate any research signals in this environment. The regime was event-driven, the filters were being adjusted, and parts of the models were undergoing retraining. There was no stable market structure confirmed by liquidity and follow-through flows. The risk of regime misclassification remained elevated. The operational status therefore remained inactive. Calendar Week 35 begins with token unlocks for RYO and WorldCoin. On Tuesday, attention shifts to US consumer confidence and an unlock for humanity protocol. On Wednesday, the second estimate of US gross domestic product, the core PCE price index, and durable goods orders take center stage. This data window combines information on growth, inflation, and interest rates. Token unlocks for Toncoin and Gate token are also scheduled. On Thursday, the European Central Bank publishes its monetary policy accounts, followed by US initial jobless claims. On Friday, the Chicago Purchasing Managers Index, final Michigan consumer sentiment, and an address by Fed Chair Warsh at Jackson Hole coincide. China has no event of comparable weight. The effects of unchanged loan prime rates and mixed July data remain relevant. ETF flows, funding, and open interest remain central control variables. Rising open interest combined with positive funding concentrates long positions. Divergence from spot demand identifies asymmetric liquidation risks. At the weekend, a hyperliquid token unlock worth around $1.1 billion coincides with thinner order books and increases local slippage risk. Higher volatility and slippage are concentrated around Wednesday's US data, Thursday's ECB and labor market releases, and Friday's sentiment data and Jackson Hole address. Further risk windows occur at the opening and closing of ETF trading, around unlocks, and during rapid derivatives adjustments. The BTC macro graphic tracks real yields, the dollar, the Federal Reserve balance sheet, global liquidity, credit spreads, and ETF demand. Research signals remain conditional on confirmed liquidity, market breadth, and follow-through flows. This is not investment advice and does not constitute a recommendation to buy or sell. It is provided solely for information and research purposes. Quantum data analytics. Analytical. Strategic. Innovative.